Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LOCKHEED Martin CORP quarterly report. Lockheed Martin Corporation offers a diverse range of businesses and services across four main segments: aeronautics, missiles and fire control, MFC, rotary and mission systems, RMS, and space. The company's offerings include combat and air mobility aircraft, unmanned air vehicles, air and missile defense systems, tactical missiles and precision strike weapon systems, logistics and integration services, ground vehicles and energy management solutions, military and commercial helicopters, surface ships, and sea-based missile defense systems, radar and laser systems, sea and air-based mission and combat systems, command and control mission solutions, cyber solutions, simulation and training solutions, satellites and space. Transportation systems, strategic, advanced strike and defensive systems, classified systems and services for national security. These businesses and services cater to the U.S. government and international customers, as well as foreign military sales contracted through the U.S. government. Lockheed Martin Corp stock price drop. A year of challenges. The past year has been marked by significant stock price drops for Lockheed Martin Corporation, LMT, exceeding 11.94%. Two major news events have contributed to this decline. In July 2025, the company's second quarter earnings report revealed substantial losses across multiple programs and a reduced profit forecast. The report showed $1.6 billion in losses, including significant pre-tax losses linked to a classified aeronautics program facing design challenges. This led to an 8% drop in recent trading. In October 2024, Lockheed Martin's shares plummeted due to lagging revenues and labor shortage concerns. Revenues of $17.28 billion fell short of analysts' expectations, while investor confidence was impacted by the industry-wide skilled worker shortage. These two events have had a lasting impact on Lockheed Martin's stock price, highlighting challenges in program execution and revenue growth. The primary drivers of revenue growth or decline can be summarized into several key areas. On the growth side, the company has seen significant increases in products and services revenue, with a 6.1% and 25.4% increase respectively in Q2 2025. The aeronautics segment has also experienced growth, driven by the F-35 program and international sales. In addition, commercial civil space programs at Space have contributed to revenue growth. On the decline side, the company has seen a decrease in revenue from the missiles and fire control segment and the rotary and mission systems segment. The space segment has also experienced a significant decline in revenue, driven by losses on classified programs and unfavorable profit adjustments. Furthermore, lower sales of classified contracts have contributed to revenue decline. Overall, the company's revenue growth is being driven by strong demand for its products and services, particularly in the aeronautics segment. However, the company is also experiencing challenges in certain segments, including the space segment, which has seen significant declines in revenue due to losses on classified programs. Net income and profit margins have declined significantly in recent periods. Net income decreased by $4 million in Q2 2025 compared to the same period last year, and further dropped from $4,809 million to $3,673 million YTD 2025. The decline is attributed to unfavorable profit booking rate adjustments and increased estimated total costs to complete contracts. Profit margins have also declined, with a gross profit margin decrease of 0.3% in Q2 2025 and 2.1% YTD 2025 compared to the same periods last year. Operating profit margin decreased from 12.5% to 12.3% in 2025. The aeronautics segment operating margin declined from 10.2% to 6%. The reasons for these declines are multifaceted, including the acquisition of Rapid Solutions, increase in pre-contract costs and FAS pension expenses, litigation and other proceedings, and unfavorable profit booking rate adjustments. These factors have collectively contributed to the decline in net income and profit margins. The company's financial performance indicates a strong ability to generate positive operating cash flow. In 2025, the net cash provided by operating activities reached $5,338 million, demonstrating a significant inflow of funds from core business operations. Furthermore, free cash flow, another key indicator of operating cash flow, stood at $4,152 billion in 2025. These figures collectively suggest that the company is successfully managing its finances and generating sufficient cash to support its growth and operational needs. The company's debt level has increased significantly over the past year. Long-term debt and current maturities of long-term debt have both seen substantial increases, with estimated fair value and outstanding principal amounts also rising. However, interest expenses have shown a contradictory trend, initially decreasing in Q2 2025 and YTD 2025, before increasing again in the quarter, ended September 28, 2025. The company's financial summary reveals a mixed performance across various segments and regions. On the positive side, Aeronautics and Missiles and Fire Control (MFC) segments showed significant growth in operating profits, with increases of $23 million and $54 million respectively in Q3 2025. The United States region also performed well in both quarters. However, Space and Rotary and Mission Systems (RMS) segments experienced declines in operating profits, with decreases of $61 million and $23 million respectively in Q3 2025. Regions such as Europe, Asia-Pacific, and Middle East showed mixed performance, indicating inconsistent growth across these areas. Overall, the company's financial performance is characterized by pockets of strength and weakness, highlighting opportunities for improvement and strategic focus on high-performing segments and regions. Management is optimistic about the company's outlook, citing several key factors. The acquisition of Amentum's Rapid Solutions business will contribute positively to results. The F-35 program remains a significant contributor to sales, representing approximately 26% of total consolidated sales. However, management also acknowledges potential risks and challenges, including increased environmental liabilities and vulnerability to U.S. government contract modifications or terminations. Despite these concerns, the company is confident in its ability to meet production and delivery commitments through 2025. Management is adapting to changes in government buying behaviors and expects international interest in the F-35 program to continue expanding. The company will maintain a disciplined cash deployment strategy, return cash to stockholders, and focus on preserving financial flexibility while minimizing borrowing costs. Overall, management's outlook suggests a mix of optimism and caution as the company navigates its business prospects and financial performance. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. For the 9 months ending September 28, 2025, the company paid out $9.90 per share in dividends, totaling $2.3 billion. Additionally, it repurchased 5 million shares for $2.3 billion during the same period. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. Inventory levels have increased by $275 million, with work-in-process inventories also rising. This is attributed to lower production volumes on certain programs, such as Aegis and CSC, and within the laser systems portfolio. Supply chain disruptions are another concern, driven by ongoing challenges including supplier shortages, performance issues, and pressures due to inflation, tariffs, and raw material availability. These issues have led to unfavorable cumulative adjustments to sales, with losses recognized on CMHP and TUHP in the second quarter of 2025. Furthermore, deliveries of F-35 aircraft were put on hold in the first half of 2024 due to technology insertion delays. These concerns highlight potential risks to the company's operations and financial performance. That concludes the financial summary for LOCKHEED Martin Corp. Feel free to comment below, and I will be happy to answer them when possible.